Have you ever wondered about the tax implications of remote work? In our post-pandemic world, remote work has become more common than ever. It's a new norm that has brought about unique tax considerations that we must grapple with. In this video, we're going to explore these tax implications, tackling the basics, diving into specifics for remote workers, and providing tips to help you navigate this complex terrain. So buckle up and prepare for an informative journey. Stay tuned as we navigate through the tax maze of remote work. To understand remote work tax, let's first discuss what it actually is. At its core, remote work tax is the tax obligation that arises when an individual works from a location different from their employer's base. This could be another city, state, or even a different country. In the traditional work setup, employees usually work in the same location as their employer, making tax matters relatively straightforward. The employer withholds the necessary taxes, which are then paid to the local tax authority. But when it comes to remote work, things can get a little more complex. Let's consider an example. Suppose you live in New York, but work for a company based in California. In this case, you could potentially have tax obligations in both states. On one hand, New York could claim you owe them taxes because it's where you live and work. On the other hand, California could also claim a slice of your income because that's where your employer is based. The same concept applies if you are working from a different country. In some cases, you may be liable to pay taxes in both your home country and the country where your employer is located. However, it's critical to note that tax laws vary greatly from one place to another. Some locations have tax treaties in place to avoid double taxation, while others do not. Now that we understand what remote work tax is, let's delve into its implications. So, what are the tax implications if you're working remotely? Well, there's no one-size-fits-all answer, as it largely depends on several factors, but let's simplify things with some examples. Let's start with the concept of double taxation. Imagine this. You're living in the sunny state of California but working for a company based in New York. Now, both states might want a piece of your income tax. This is a common scenario for remote workers and can lead to double taxation, where two jurisdictions are taxing the same income. However, many states have reciprocal agreements to prevent such issues, so it's essential to check the tax laws in both the state where you live and where your employer is based. Next, let's talk about state tax obligations. The key point here is that your tax obligation is generally tied to your physical presence. For instance, if you live and work in Texas for more than half the year, you are considered a resident and Texas can tax all your income even if your employer is out of state. Now let's go global. Say you're an American living in Paris and working for a US company. This is where the foreign earned income exclusion comes into play. Essentially, US citizens or resident aliens living abroad can exclude a certain amount of their foreign earned income on their US tax returns, thereby reducing their US income tax. But remember, you might still be liable for taxes in your host country. These are just a few examples, and the tax landscape can be more complex depending on your circumstances. There could be local taxes, specific remote work tax laws, and even tax treaties to consider. Also remember that tax laws can change, and what's true today might not be the case tomorrow. So, in the end, it's always a good idea to get professional tax advice tailored to your specific situation. It may seem tedious, but understanding these implications is crucial to avoid any unpleasant surprises at tax time. Now that we know the implications, how can we navigate through this complex tax landscape? First off, it's important to keep a detailed record of your workdays in each location. This can be as simple as marking a calendar or keeping a digital log. Why? Because the number of days you work in a particular state or country can impact your tax obligations there. Some jurisdictions tax income earned by non-residents who work there for even a single day, while others have more lenient thresholds. Keeping track of where and when you work can help you avoid unexpected tax bills and penalties. Secondly, consider seeking professional tax advice. Navigating the tax rules for remote work can be a daunting task. A tax professional can provide guidance tailored to your specific situation, helping you understand your tax obligations and minimize your tax liability. They can also assist with tax planning and ensure your tax returns are accurately prepared. Moving on to our third tip, it's crucial to understand tax treaties. If you're working remotely from a foreign country, you might be able to benefit from a tax treaty between that country and your home country. Tax treaties are agreements between two countries to avoid double taxation of the same income. They can also provide other tax benefits. However, the rules are often complex and can vary significantly from one treaty to another. So, it's advisable to consult a tax professional or do thorough research before making any tax decisions based on a tax treaty. Lastly, always stay informed. Tax laws and regulations are constantly changing, especially in response to the growing trend of remote work. Regularly reviewing tax updates and changes can help you stay compliant and take advantage of any new tax benefits. In conclusion, whilst the tax implications for remote work can be complex, they're not insurmountable. By keeping track of your work locations, seeking professional advice, understanding tax treaties and staying informed, you can navigate this landscape more effectively. With these tips, you can better manage your remote work tax obligations. Let's recap what we've learned today about remote work tax. We started with the basics, highlighting that taxes for remote work are not as straightforward as traditional work. They depend on a variety of factors such as your residence, your employer's location, and where you physically perform your work. We then delved into the tax implications for remote workers. We discussed how different states and countries have different tax laws and how these laws affect remote workers. We also emphasized the importance of understanding these laws to avoid potential legal issues. Lastly, we shared some practical tips to navigate remote work tax. We discussed the benefits of consulting with a tax professional, keeping track of your expenses, and staying informed about changes in tax laws. Remember, understanding your tax obligations as a remote worker can save you from unwanted headaches in the future. Thanks for watching, and don't forget to like and subscribe for more informative content.